From the News Channel 5 Network, this is OpenLine.
Hello, everyone. Welcome to Open Line on Tuesday night. I'm Ben Hall. We are talking tonight about what is on everyone's mind, and that is, of course, it is the night before taxes are due. It's April 14th. Of course, April 15th is the filing deadline. So what we want to do tonight, answer your questions if you have any last-minute questions. And the big one I bet many would have is it too late to file an extension? So we'll talk about that. Happy to have with us Dr. Friday. Dr. Friday, thank you.
Hey, it's like the night before Christmas. We have the night before tax season.
Yes, it's a big night.
Exactly.
Big night for a lot of people. A lot of people are, filing, working very hard right now.
My whole staff will be working almost till dawn, probably.
Really?
Yes, we'll be working a very long. I will be going back to work after this.
Oh, wow.
Yes.
All right, so that question, and I bet there'll be people that ask a variation of it, but here we are, deadline's tomorrow. Is it too late to file an extension?
It is not. You have till midnight if you can e-file or go to the post office. I don't know when the post office, nowadays, not as many post offices are open than there used to be with e-filing and everything, but you can, as long as it is stamped, postmarked for tomorrow, or if you e-file theoretically until midnight, we can be transferring those. And then if there's a kickback, we actually have 48 hours to find out what the problem is and still file that extension.
And why is it so important to just file something? An extension, or I think you even said just file something, right?
Right, to the best of your ability. Obviously, if you're missing documents or you haven't actually put anything at all together, the extension, but remember, that is only extending paperwork. So if you owe money, it's due tomorrow, okay? Period. It's due, and then there will be interest and penalties for whatever you don't pay. So that's not extending or changing anything on us. So what we're doing basically is trying to save you the penalty of failure to file penalties. Those penalties can be up to 15% of what you owe. So it's a huge penalty, where if you don't pay, a lot of times the penalty is only 5% plus interest. So that's a lot easier to deal with.
So let's say somebody's at home right now and they're trying to get everything together. Maybe they put it off and they're trying to put everything together. What are some of the mistakes that people make, and what advice do you have? I mean, obviously do it sooner next year, but they know that. They don't want to be hit over the head with that.
I mean, most people that are probably watching this show have filed taxes for years. It's not like we're telling you anything new here. Rushing through your taxes, you're probably going to make a mistake. That's simple. If you're rushing through doing taxes, it's one of the reasons why we actually a week ago filed most of our extensions for all of our normal clients or returning clients. We still will be filing extensions up through tomorrow because of people that will probably contact us or ask us to. But the reason is, even if we do get the tax returns done by today, tomorrow, and we file them, who cares? You have an extension on file. I mean, you can file that in February and still file your taxes. One has nothing to do with the other, right? So, if you're a procrastinator, go ahead and file your extensions early. Maybe you get something filed, But really the mistake is, don't rush. If you're doing it on one of the tax softwares and there's a question you don't know, make sure you get, I I understand there's helps and there's different things you can do. Don't just take an educated guess, because often that leads to you thinking, if I say yes to this question, I get more than if I say no, so I'm going to go with yes. That seems to be the right answer. Not always. No, might have been the right answer, and you maybe were not entitled to the refund that you thought you were going to get. So that's the kind of things you got to be careful.
The other thing you got to think about for a lot of people is the Affordable Health Care Act, or Obamacare as it's known. That's really changing things for a lot of people this year.
It's changed it for all of us, to be honest. One of the questions, of course, we now have to ask, do you have proof of insurance? Give me proof of your insurance, which we never had before. Did you have it for 6, 8, 9, 10 months? How long did you have it? Did you go through the marketplace? Did they give you money to help pay or supplement you to help pay for it? If so, are you now paying, having to pay some of that back? I've only had one case of that in my personal practice. Most of my people are the opposite side, but it doesn't change the fact those are questions that you didn't have all the other years doing your taxes. So if you're used to filling in this box and this box, bam, you've got a new question.
And is that catching people?
It's catching me. I mean, it is one more question. I've done this for 20 years. So you have a certain system, and when you add something like that, you've got to double check yourself all the time.
And we have a couple calls. I'm going to go to the calls here in a moment. Hold on the line. But how aggressive would you say the IRS is now. Is it more aggressive, less aggressive? Where do we stand?
I think we're more aggressive with paper audits, meaning that they basically have the way of matching records from all the different, they have your bank records, they have what's turned in from 1099s and W-2s and all that, and if or stock sales, all of that it's turned in, and so then if it doesn't match, the computer sends out an automatic paper audit. We've changed your tax returns because, right? Maybe they didn't have a cost basis on your stock, so they're charging you 100% because they don't know about the cost basis. Now that's getting better and better because that's being reported more on the forms, on the 1099-Bs. But my point being is that audits are up. I think actual face-to-face audits are down.
Interesting. So the computer generated.
Hey, they're making money without paying labor. Perfect plan.
Let's go to Hope. Hello, Hope.
I like that. Hope.
Yes, how are you?
Great. What's on your mind?
Well, I have a question for Dr. Friday. If she could expound on what a carryback is. It's the first year I did my taxes on TurboTax,
Okay.
and I may have misunderstood it, but I did file it anyways. I guess if they catch it, I'll have to pay whatever is necessary to pay. But if she could expound on a carryback.
Can I ask you a question, Hope? Did you have a negative tax return or a loss last year or this year?
Well, last year I did because of some repairs to a rental property.
Okay. So what happens in the year in which you have that loss? You can roll it back 2 years or forward 20 years. So the reason we like to roll back is, let's say in 13, let's say you have the loss in 14. In 13, let's say you paid taxes. If you rolled back that loss, we can get some money, because we now can make that tax return a negative and go back 2 years and collect on tax and revenue you may have paid taxes on. It will not affect self-employment tax, but ordinary income tax.
Okay, so the actual loss was a roof in late 2013, so I claimed it in 14. So does that sound about right?
So you claimed it in 14, so you could roll it back to 13 and then back to 12, and then roll whatever's left forward for 20 years if you have enough to do all that.
Well, we'll just see how it works itself out, I guess.
Okay. Well, if you don't roll it back, you can always roll it forward 20 years. So, I mean, backwards sometimes is more confusing for people, but the forward is going to keep going. If you continue with the software, it should automatically give it to you.
Okay.
Okay?
And it made me paper file this time because of that, I believe. That was the reason that they requested a paper filing.
Correct. Yes, Hope. That's correct.
Thank you.
All right, now, what does that mean?
We cut off Hope.
Sorry, Hope. All right, so she had a rental property that needed a new roof, and what happened next?
So she didn't have insurance, apparently, and she ended up with a large loss.
Okay.
So assuming that the loss on the rental, she was a casualty loss she probably ended up with. So she ended up with a negative where most people have a positive tax return. So when that happens, you have an option. You have two options. You can take that, let's just say that bottom line was $20,000 negative. Well, you could roll that forward until you eat it up the next year or a couple years, depending on what your income bracket is. Or you could physically roll it back to 13 and reduce that one now. Or if there's still some left, go back to 12, which means you immediately would get some money in your pocket because you would be able to collect on some of those ordinary income taxes you might have paid in those years. So it's a wonderful feature. Normally I have it more with huge business losses.
Interesting. Okay. All right, let's go to Patricia. Hello, Patricia.
Yes, hello.
Hey.
Hi. What's on your mind?
I would like to know, do you file on disability? And do you file, like, if your past employer had, like, long-term disability on you? Because I received, like, tax forms, but last year on the disability, they told me that I didn't have to file.
Well, there's several types of disability. So if the form you received is called a 1099-R, then that kind of disability, and if there's something in box 2, yes, you are going to file because it was paid by your boss or by the old employer and it's income to you. If it's Social Security disability, if you're single and that's the only income you make, then no, you won't pay on it. And if you're married, you may end up paying taxes because of the person you're married to. And no, you can't file married filing separately to avoid it. You're still married. So the taxes would be due if you have someone that you're married. Divorce would be the answer.
Okay.
So for the employee part, you said it...
Did
it needs to be a 1099 form?
Did come on what's called a 1099-R?
Okay.
Did it? I don't know. If it did, if it reported on something like that or a W-2 that's marked sick, then those two would need to be reported. If it's just a statement saying this is how much you've collected throughout the year, then no, there would be no tax most likely due on it. Unfortunately, disability can be funny. It really does fall on both hands, unfortunately.
Okay, we have to take a break. There are a couple of lines open. If you want to call, there's the number 615-737 plus 615-737-7587. We'll take a break and then get to your phone calls right after this.